Morning, guys. It's Wednesday, October 1st, 5:23 a.m. Central Time. Grain markets just a little bit lower this morning. We've got a special guest, Ben Scholl. Good morning.
Good morning. How are you all?
I'm good. You're joining us from the East Coast.
Yes.
We're here on Central Time, but you are a part of this first story that we're going to do. So, Mackenzie, let's do the copy, and then we'll talk to Ben about it.
So President Trump will meet with Argentine President Javier Milei on October 14th. Milei is seeking to secure a $20 billion U.S. credit swap to provide dollar liquidity as Argentina struggles with a weakening peso. The deal has drawn criticism from some of Trump's allies who argue the U.S. effectively bailed out Argentina. Leaked text messages from Treasury Secretary Scott Bessent's phone suggest that Argentina took advantage of the agreement while U.S. farmers shouldered the cost.
All right, Ben. There were leaked text messages photographed on Scott Bessent's phone. He was at some sort of hearing or whatever. First, let's read the text. This was what was on the phone. We bailed out Argentina, and in return, the Argentines removed their export tariff on grains, reducing their price, and sold a bunch of soybeans to China at a time when we would normally be selling soybeans to China. And this was from a contact that appeared as BR, which the media has inferred as being Brooke Rollins. Now, at the bottom of this text, and I didn't blow it up because most of you guys are watching on your phone, at the bottom of this text was an X or Twitter post from you. You were on Scott Bessent's phone. Tell me about the X post that was on Scott Bessent's phone.
So it wasn't particularly complimentary of what they were up to. And it just said China and Argentina are working together for soybeans as Bessent offers to subsidize the Argentine economy. They think you all are stupid. Good morning. And it was good from the standpoint that, the administration is obviously listening to the people out there. Not particularly wild about seeing my face pop up on his phone and in a UN General Assembly meeting, with that being the context.
I don't know, man. I think it's pretty cool. You know what? It's and we talked about this before we started taping. First off, they are paying attention. They're paying attention to the farm crowd and the grain industry crowd, which would be you and me, I guess. And this is, think about this. So this Reuters article is suggesting in so many words now that maybe this $20 billion bailout is at risk in some way, shape, or form. Could you imagine if something that you posted on Twitter resulted in this $20 billion bailout not going through?
I mean,
you're affecting real change, Ben.
No, first of all, I don't think I said anything that probably 10, 20 other people didn't say. I probably said it in a snarky or inflammatory enough way to get somebody's attention, but I don't think that idea is unique to me, or there wasn't a million other people that were just as offended by this deal as I was.
Well, I suppose that you're speaking for the people, and we're going to get a lot of political comments in the YouTube stuff here. But no matter, I've said this before, guys, no matter which side of the aisle you're on, if you can't criticize your own party, there's something wrong. You've got to be able to be critical, and I think in this case, to criticize what they're doing with Argentina is to be very, very fair. If you're a farmer, if you're somebody who's interested in advocating for the farmer or for the grain markets, I mean, you've got to criticize what they did with this Argentina thing. It's a really bad look.
Yeah, absolutely. I mean, completely unnecessary. I think the Argentines were already kind of taking care of themselves with a tax holiday, and to just go in and drop $20 billion of credit swap on their lap just is excessive and over the line when we're just, the rural economy is kind of on its last leg here at home.
Yeah. Okay. So you're not just here to talk Twitter with us. Let's talk about the grain stocks report.
Yeah.
All right. So corn futures tumbled on Tuesday following USDA's quarterly grain stocks report. USDA pegged September 1st corn stocks at 1.53 billion bushels, down 13% from a year ago, but 15% above the average trade estimate. As a result, the December 25 corn contract fell 6 cents to settle near $4.16 per bushel, its lowest level in about a month. Soybean stocks came in slightly below expectations, yet futures still sold off, with the November 25 contract falling roughly 9 cents to close near $10.02 per bushel, likely pressured by weak export demand. Wheat futures also fell, with stocks coming in above both expectations and last year's levels.
All right, let's start with corn. The trade missed this, and USDA has been, let's just say the reports have been bad as of late, like really bad. Like they've been missing all sorts of stuff. What are your thoughts on the corn numbers?
For me, it's just another bearish input, another thing that we're going to have to work through as it rolls into the new crop. I think it makes sense from what the spreads did this summer, given how the new old fell apart. So I think it was something that everybody was kind of looking for. The beans are probably the most disappointing because the bean market is doing what it's supposed to do. We reduced acres to 81 million. The beans just need the government to get out of the way, and I think they're going to be fine. And wheat's probably coming up next, just because of the forward economics of growing wheat.
Let me give you a couple corn comments here. So the stocks number in corn and what they said in the report would imply that most of the quote extra corn bushels are going to come out of feed and residual. That's where they missed the mark. And what USDA is projecting now is this. They're projecting that we're going to have 6.1 billion bushels in feed and residual during this current now new crop marketing year. Last year, they've got to walk that number back to like it's going to be 5.5 billion bushels. You could make an argument that on the new crop balance sheet, which is a marketing year that just started, but on the new crop balance sheet, USDA is overstating feed demand by like 500 million bushels, Ben.
Yeah.
The animal numbers ain't coming up. They're probably going, Mackenzie, are we going to have more cattle to feed this year than last year?
No.
And this very similar situation, not similar, but hogs and poultry not up. I mean, this could get messy.
I think you're spot on with that. I think that all the numbers are getting so loose that the demand is what it is. And I think we have a decent idea that's overstated, but you also have, until we get to this time next year, we're not going to be able to count on acres and yield either. So I think there's going to be a lot of moving parts in corn going forward. It might be just as bearish it is now or worse. Maybe it gets better. It's just the numbers are really getting sloppy.
People have been very critical of USDA always. In my entire career has involved criticism of USDA. But I think that the criticism is becoming more and more fair as these reports get worse and worse and worse. I mean, they're missing corn acreage by millions of acres into August and September. Now they're missing the stocks by 200 million bushels. To be fair, what's going on at NASS, at the National Agricultural Statistics Service, which is a division of USDA, it's an absolute mess. They're staffed at like 50 or 60%. They're doing all these relocations, and instead of relocating, people are quitting. They don't have the resources that they need to do a job that's already damn near impossible. It's messy. Let's look at a corn chart. What do you think about this? It's starting to look kind of not so great to me.
Yep, same. I think 414 right in here. That
was the level I thought. I wrote that in the email this morning. I said 414. You'd like to see it close above that today in D's corn.
Absolutely. And then I would like to see us go take out and finish out that gap, but we got to hold right here. Otherwise, maybe the low fours, 405, 7, somewhere in there has been a number I've heard thrown around. I just don't know who is really going to want. Maybe funds want to pile in and short corn under $4 and beans under 10, but I don't see it. Not this time. Bean harvest for me is on our farm in Illinois. Look, we're going to wrap up here probably in the next week. So we might very well be in the kind of the gut slot of beans. Corn's got a ways to go, but I'm just not sure who's going to want to sell this thing down below 4 and 10.
I'll tell you who. Nobody wants to sell corn here, but the farmer may have to sell corn here because we're going to harvest 90 million acres of corn, and the farmer needs cash. They don't have the storage for all of it, so there's going to be some bushels that they're just going to get puked, for lack of a better word, out of the field, right?
Yeah, absolutely. Especially, I would assume in the Western Corn Belt, from where I buy my draw areas, they're all going to be able to tuck it away. But no, for sure, cash flow is a big thing. People got to turn these bushels into dollars, and so you're going to see some forced liquidation on that. But especially on the corn side, I'm not sure that I think it'll be beans that come out first.
So here's a soybean chart, and it looks almost, you can never say never or inevitable, but it looks almost inevitable that you go test that multi-month trend line that sits at about 987 November futures today.
Yep.
Doesn't look very good. Doesn't look very good at all. All right, let's talk about shutdown.
So the government shutdown will affect USDA market reporting. The shutdown began at midnight this morning after lawmakers failed to reach an agreement on a spending bill. The shutdown is considered partial because essential functions continue while non-essential activities are suspended. During a shutdown, approximately 41% of USDA staff continue to work. It's unclear whether today's weekly ethanol report, tomorrow's U.S. export sales report, or Friday's CFTC report will be disrupted.
And then we've got an October 9th crop production and WASDE report from USDA. It's supposed to be next week. And I think my understanding is that if they're shut down for like more than 2 or 3 days, there's not going to be a report, or it could be delayed. Do you think this has any impact on the market whatsoever, Ben?
The way the reports have been going, I don't know that we need more bearish input in the market, but I would like to see it open. I'd like to see the report come out. I think we have a big question coming up. What's going to happen with yield at the end of the day? I'm not sure it matters to carry out.
Okay, so this is when China is going to come in and buy a whole bunch of soybeans when USDA can't report the sales, right?
Would there be any other way for this to go down?
Yeah, that's exactly how it should happen. Here's a cool graphic from my friend Dave Whitcomb at Peak Trading Research. Our shutdown's bullish. The last 3 times around, yes, in both the S&P 500 and in the ag trade, not to a super significant degree, but I know people are going to ask about, like, is it bullish? Is it bearish? Is it whatever? That's the statistics here.
The Mississippi River is facing historically low water levels for the 4th consecutive year. Nearly half of all U.S. corn and soybean exports move by barge down the river before being loaded onto vessels for global markets. Grain transport, however, is now being disrupted by the low water levels. In response, authorities have imposed restrictions on barge drafts and tow sizes, which has sharply reduced shipping capacity. Southbound grain shipments have plunged 79% in just the last month. At the same time, barge freight rates are climbing, adding pressure to basis levels, though costs have not yet reached the record highs that we've seen in previous drought years.
Ben, you're a mover of grain, correct?
Yep, on barge for sure.
Okay, so what do you think?
I think that values in barge freight are very reasonable given the water stage that we have. Last time that we did this, 21, 22, barge freight climbed to like 1,500%. We're probably about half that, which I think speaks to the bean program also. A lot of this is moving out the P&W. A lot of that Southeast Asia business is going out that way. So it could be that. Also good ownership. A lot of people probably betting on to come up with a big crop that kind of tapered off on the Eastern Corn Belt. So there could be just not a lot of people needing barge freight, but actually have too much barge freight at the moment.
Yeah. Mackenzie, what did cattle do yesterday?
Cattle futures bounced back. Live cattle were 52 cents to $1.57 higher. Feeders saw gains ranging from $4.15 up to $5.75. Box beef prices were mixed. Choice was up 35 cents at $371.03, while Select was down $1.64 at $347.25.
Guys, have a great day. Ben, thank you for joining us, sir. We'll talk to you guys tomorrow.